Hello, welcome back to Father and Son Investing. A lot of people who are I-bond holders are wondering what the next interest rate will be on their I-bonds. Today I'm going to show you how you can get the best estimate out there of what inflation is doing, and I'm going to show you how you can just go ahead and calculate your own interest rate when those numbers become available. At the end of this video, I'll give you what the best estimate will be for the I-bond interest rate come November 1st. All right, the first thing, inflation. What is the best estimate of inflation today? I'm going to take you to the Cleveland Fed's website, the Federal Reserve Bank of Cleveland, where they have something called inflation nowcasting. You can see this on a daily basis, and they will give you what the estimate is of what the CPI and the PCE are. PCE stands for Personal Consumption Expenditures. But before I give you those numbers, I just want to run through how the Cleveland Fed does their predictions. Part of the problem with the way inflation is reported now is that it comes out a couple of weeks after the month has ended. So we don't know what the inflation rate is for January until well into February right now. That's calculated by the Bureau of Labor Statistics. Wouldn't it be nice if there was a way of predicting today what the inflation rate is doing today? That is what the Cleveland Fed is trying to do. In their nowcast model, they will provide 4 different numbers. The first estimate is for the Consumer Price Index, CPI, or sometimes you'll see that as CPI-U. The U part just stands for urban customers. The Consumer Price Index includes fuel and food. The next estimate that you'll see from them is the CPI core. Just know that the core CPI number removes food and energy from that formula. They also provide the PCE, or the Personal Consumption Expenditures Price Index. And lastly, they predict the core PCE that is also similar to the PCI, where it subtracts food and fuel. The accuracy of their predictions has proven to be quite well, and in fact, they tend to beat the survey of the so-called experts who are predicting what the inflation rate will be. There are 4 steps that they include in their nowcast recipe. We'll quickly cover those. The first is just core inflation. Remember, that removes food and fuel from the factors, and they use estimates from the recent past for this part. For the second step, they add in food price inflation, and again for this, they use estimates from the recent past. Lastly, they factor in gas price inflation. Now, this is where their data can be very helpful because they can look at things on a weekly basis or daily basis in regards to fuel prices and oil prices. They take these 3 elements and mix them in to come up with their nowcast. Now that you've seen how they go about making their predictions, let's just look at the numbers. As of 7 October 2022, they are saying that the inflation prediction for September on a month-over-month percent change is 0.32%. So that is comparing to August of 2022. And on a yearly basis, they're saying that 8.2% is the inflation rate year over year, so that's comparing to September of 2021. You'll also notice that they provide the current estimates for inflation for October of 2022. Note that this is also as of 7 October 2022. They do update this each business day. So Monday through Friday, you can see this estimate. So later today, they will improve or update this estimate. But right now, they're saying for October, month over month, 0.72%. That's a significant increase. I think we'll see that a lot of that is going to be due to rising oil prices again. That is comparing October, the current month, to September. Remember that this is an estimate. It is not an exact science here. Sometimes their estimates are off by quite a bit, but most of the time they are very close. So we're going to go ahead and use 0.32% to help us calculate what the CPI number will be for September of 2022. Once we have that number, we can calculate what the interest rate will be for I-bonds come November 1st. If you're not familiar with what a CPI-U number is, let's just quickly cover that. Just know that from 1982 to 1984, they took that as the baseline period, such that we can see here in about August of 1983, the CPI-U number was 100.2, so just about that baseline number. Now, what you can do to compare things is to be able to take this baseline number and compare it to the current number. The way to look at this is that if something cost $100 in August of 1983, in August of 2022, a similar item would cost $296 and some change. Now, I've used Excel here to make the math easy so that I don't have to keep repeating this with each successive video or with different estimates. The last Cleveland Fed estimate on my last video was 0.33% for September 2022, so we can see that that has changed very little compared to the current Cleveland Fed estimate of 0.32%. To get the current CPI-U number, I took the previous CPI-U number from August of 2022, multiplied it by 0.32%, and added that to the previous CPI-U number. When we do that, we'll have a CPI-U number of 297.119, and then the formula for calculating the interest rate is actually quite simple. All we have to do to get the current inflation rate is take the new CPI-U number, subtract the previous CPI-U number, divide it by the previous CPI-U number, and times it or multiply it by 100. Now, it's important that you know that the 2 months that get calculated for the semi-annual interest rate are from March and September. Those are the only 2 months that count in the formula. Trust me on that, but if you're not convinced of that, you can go to the treasurydirect.gov website and you will see that that is the case. So when we let Excel do the math for us here, we'll come up with a semi-annual inflation rate of 3.344%. Remember, that is the semi-annual inflation rate. If you want to annualize that, then you're looking at 6.7% roughly. What does that mean? That means that my estimate for what the next I-bond interest rate will be come November 1st will be 6.7%. That's on an annualized basis. What your money will actually earn will be 3.344%. That is my estimate. We'll see how well that comes out Thursday. I'll give you another updated video on Thursday with what the actual interest rate will be, and we'll see how close I came. I hope this information today was useful for you. You learned how to get a NowCast, the best current estimate for inflation. You learned how to go ahead and predict what the CPI-U number will be. You can do that on a month-to-month basis, and every 6 months you can now estimate for yourself what your next I-bond interest rate will be, even before it's announced on November 1st or May 1st. Share this information with a young person in your life. If this was useful, please give us a thumbs up. We'd love to have you as a subscriber. And as always, until next time, enjoy your investing.